Welcome back to the Daily Crypto Deep Dive. Today we're stepping into a corner of the market that never quite dies. It just waits in the shadows. Privacy coins, Monero, Zcash, maybe even Dash if you're old school enough to remember its first run. These projects were once the beating heart of crypto's rebellion. Digital cash without eyes, transactions without footprints. Then came the crackdowns, exchange delistings, government bans, headlines about dark web usage and AML fears. For years, privacy coins were treated like radioactive relics of crypto's past. But as the spotlight of regulation grows harsher and the financial world edges closer to total surveillance, something strange is happening. The outcasts are becoming relevant again. It's not hype, it's not nostalgia, it's timing. And timing in crypto, as we know, is everything. The next big cycle might not just be about ETFs or AI narratives, it might be about privacy. Because the harder regulators push for transparency, the more valuable true anonymity becomes. Every trader who's watched a wallet get blacklisted, every business that's had data leaked, every government that's tightened its grip, all of it feeds a counter-movement quietly gathering speed. A movement built on a single word: privacy. So today we're going to unpack that movement, from what's sparking renewed interest to where it could go next. And by the end, you'll see why some analysts now think privacy coins could be the black swan trade of the next bull run. Before we dig in, take a second, follow the show, drop a 5-star rating, and help keep independent crypto journalism alive. It really helps more than you know. Alright, let's dive in. To understand where privacy coins might be heading, we've got to start with what they actually are, and what they're not. Bitcoin was always marketed as anonymous, but that was never true. It's pseudonymous at best. Every transaction is permanently etched on a public ledger. It's traceable. Every coin has a history. That's great for accountability, terrible for discretion. Privacy coins flipped that idea on its head. Monero uses ring signatures, stealth addresses, and confidential transactions to make it almost impossible to link sender, receiver, or amount. Every transaction looks the same. Zcash takes a different approach, using something called zero-knowledge proofs, ZK snarks, to allow verification without revealing details. Both systems are elegant, both are controversial, and both have been under regulatory fire for nearly a decade. But that fire might be the very thing that forged their future. Here's why. The financial system is becoming more transparent, not less. Governments around the world are pushing new reporting standards that link digital identities to every transaction. In Europe, the AML regulation coming into force by 2027 will require exchanges to reject or flag anonymous transfers. In the United States, the Treasury has already floated new disclosure requirements for crypto mixers and privacy-enhancing technologies. At first glance, this looks like the end of privacy coins. But beneath the surface, the opposite might be true. Because the more invasive regulation becomes, the stronger the demand for tools that preserve autonomy. In countries like South Korea, the Philippines, and even some regions of Europe, researchers have found a correlation between increased surveillance and increased private transaction volume. In plain English, when people feel watched, they find a way to disappear. That's why Monero and Zcash aren't fading, they're adapting. Monero's latest update added a decoy selection algorithm that makes chain analysis nearly impossible. Zcash is rolling out Halo 2, a next-generation zero-knowledge proof that removes the need for a trusted setup. Both are signs that innovation hasn't stopped. It's just moved underground. And traders are noticing. CoinMarketCap data shows that Monero's daily transaction count has quietly doubled since spring. Zcash volumes have ticked up on smaller, unregulated exchanges. Analysts at Coinmetrics recently called this the shadow rally, money flowing where it can't be tracked. But there's a paradox. Privacy coins can't thrive without liquidity, and liquidity needs exchanges. Yet those exchanges are the ones most likely to delist them. Binance, OKX, and Kraken have all limited or removed privacy pairs in various jurisdictions. That's forced decentralized alternatives, like Havano, Bisq, and Thorchain, to fill the void. What's fascinating is how quickly the liquidity has followed. As one trader put it, You can ban privacy coins from exchanges, but you can't ban people from wanting privacy. And that desire is spreading. In the corporate world, privacy isn't just a preference, it's compliance. Companies have to protect customer data, intellectual property, and financial transactions. A transparent chain is a liability. Imagine Apple paying a supplier and revealing its entire payment network to competitors. Absurd, right? Privacy tech fixes that. So, while Monero and Zcash attract headlines, the underlying tools, zero-knowledge proofs, confidential computing, homomorphic encryption, are being explored by everyone from JP Morgan to Consensus. Here's where it gets interesting. What happens when mainstream finance starts adopting the same tech once used by so-called privacy criminals? Suddenly the narrative flips. Privacy stops being suspicious. It becomes sophisticated. One blockchain analyst from Delphi Digital put it perfectly. Privacy isn't anti-regulation, it's anti-exposure. It's the next natural step in maturing finance. That sentiment has echoed across recent conferences, including Token 2049, where panelists openly debated integrating privacy layers into institutional infrastructure. That would have been unthinkable 3 years ago. Still, privacy coins remain volatile. Prices move sharply on rumors of regulation. In 2021, when South Korea banned anonymous trading, Monero dropped 40% in a week. When Zcash was delisted in Japan, liquidity dried up for months. But in 2025, something different is happening. Every crackdown seems to spark short-term pain and long-term accumulation. Investors are treating delistings as buying opportunities, betting that the networks themselves will survive, even if access tightens. And it's not just speculation. Developers are doubling down. The Monero community recently funded its biggest upgrade since 2022, while Zcash developers are partnering with the electric coin company to streamline shielded transactions for mobile. The end goal? Privacy that's as easy to use as Apple Pay. That's where the future lies. Convenience and compliance, side by side. If they can make privacy as frictionless as transparency, they win. Let's zoom out. Why does this matter for the wider market? Because the next crypto cycle is shaping up to be the most regulated one yet. ETFs have opened the floodgates for institutional money, but they've also turned the spotlight directly on blockchain transparency. The same institutions buying Bitcoin now are hiring analytics firms to monitor every transaction linked to their wallets. That creates a new equilibrium. Visibility as the default, privacy as the premium. Analysts at Bernstein recently published a note calling privacy the new alpha. Their thesis is simple. Once Bitcoin and Ethereum are fully absorbed into traditional finance, investors will look for the next frontier, assets that behave differently. Privacy coins fit that bill. They're low correlation, capped in supply, and culturally contrarian. They thrive when regulation tightens, and they remind people why crypto was built in the first place. But there's still the elephant in the room: compliance. Can privacy and regulation coexist? It's not an easy balance. Monero's community has often resisted any KYC integration. Zcash, on the other hand, is exploring optional disclosure features, cryptographic proofs that let users prove compliance without revealing details. It's a clever middle ground. You can prove your transaction follows AML rules without exposing your address or counterparty. If regulators accept that model, it could redefine how privacy operates in the legal economy. And make no mistake, they're watching. Just last week, the Financial Action Task Force issued an updated guidance note acknowledging privacy-enhancing technologies as a potential part of responsible innovation. That's a far cry from the outright hostility we saw in 2019. It doesn't mean global approval, but it does mean the conversation has evolved from ban it to manage it. That evolution might be the green light privacy projects have been waiting for. Of course, the tech isn't perfect. Privacy protocols face ongoing attacks. Chain analysis companies constantly try to break the obfuscation. In February, a research group from the University of Singapore found a correlation pattern in Monero's decoy selection, potentially reducing anonymity for a small subset of transactions. Within weeks, the developers patched it, but the message was clear. Privacy is a moving target. Every advancement invites a countermove. Yet that cat-and-mouse game is exactly what makes this story fascinating. Because unlike Bitcoin or Ethereum, which have largely stabilized, privacy coins live in perpetual evolution. They adapt faster than regulators can write policy. And that's why many analysts see them as a hedge, not just against inflation, but against the overreach of digital transparency itself. Still, none of this is a guarantee. Privacy coins could just as easily fall under total ban in major economies, strangling liquidity altogether. That's the risk. But risk is the point. This sector isn't about chasing safe yields. It's about betting on a principle that the right to transact privately will outlast any regulatory wave. And if that principle proves right, early believers stand to benefit disproportionately. Let's pull back for a second and get philosophical. Every era of finance has its rebel asset. Gold was once outlawed in the United States. Offshore banking was demonized before it became a pillar of global trade. Even cash itself was once called the enemy of progress. Yet every time authorities tightened the reins, demand for autonomy rose. Crypto was born from that same instinct. Privacy coins just take it to its logical conclusion. And the irony? The same cryptographic tools that regulators fear are now the same ones they'll likely adopt to protect national secrets and digital identities. Zero-knowledge proofs aren't just for Zcash. They're being explored for digital passports, tax filings, and interbank settlements. So in the end, privacy isn't going away. It's just evolving. The question is whether the original privacy coins will evolve with it, or be replaced by institutional clones that wear the same skin but obey different masters. Either way, the narrative is shifting again. Privacy is back in the spotlight, not as a crime, but as a commodity. Traders who understand that, and position accordingly, may have an edge when the pendulum swings. Because if this decade is about surveillance, the next one will be about escape. Before we wrap, a word of caution. Privacy coins aren't a ticket to guaranteed profits. They're volatile, risky, and in some jurisdictions, legally gray. This podcast is for education, not financial advice. The goal is understanding, not speculation. What matters is that you recognize the bigger picture. When every transaction becomes trackable, privacy becomes priceless. So as regulation tightens, as CBDCs roll out, as blockchain analysis firms map more of the network, remember this moment. Somewhere in the shadows, a group of developers is working quietly on the next upgrade to keep the flame of financial privacy alive. They're not loud, they're not flashy, but they might just be building the foundation for the next revolution. If you've enjoyed this episode, follow the show, share it with a friend, and drop a 5-star rating. It helps us keep digging into the stories that others overlook. Crypto's future won't be decided in conference halls or ETF filings. It'll be decided in the code, in the networks, and in the quiet resistance to overexposure. This has been your daily crypto deep dive. Stay private, stay sharp, and as always, we'll see you at the top.